British American Tobacco stock offers investors a dividend yield of 8%, but is that dividend yield safe and sustainable for long-term passive income investors? That's the question I'm going to answer in this video, so let's get right into it. Starting with the most important thing I look at when I'm trying to answer if a dividend yield is safe or if this is a dividend trap. So the thing I look at is dividends per share and earnings per share. More specifically, what I'm looking for is earnings per share that are much higher than dividends per share, because that tells me that this is sustainable and there's a cushion just in case earnings per share were to fall, it would still be above dividends per share. So that's what I look for, and this is what I have pulled up here for British American Tobacco. In the purple, I have BTI's EPS, and you can see in the orange the dividends per share. Now, for the most part, over the last 5 years, British American Tobacco's earnings per share have been well above its dividend per share, save for that one time here in this year when dividends per share were higher than earnings per share, but that has flipped to a better ratio most recently at earnings per share of $3.50 with dividends per share of $2.65. So for the last 5 years, the earnings have been well above dividends, which shows me a very good sign in terms of the sustainability of this dividend per share, and in fact, perhaps an increase in dividend per share or an ability to increase the dividend per share over the next several years, considering that British American Tobacco has done a good job investing in vapor products and vape products, and that segment of the business could start to generate profitability. So they could start to reap the benefits of those investments in that transition starting as early as next year, but I wouldn't count on it from then. I would say starting 2025. So they've done a good job with that. They've put in a lot of time, energy, and investment in that, and they should start to see the benefits of that investment. The next thing I like to look at when I'm measuring the sustainability of a dividend is long-term debt and cash. And for British American Tobacco, it has $51.58 billion in long-term debt and just $2 billion in cash. This is a little bit concerning. It's not a red flag for me, especially when the company is generating such strong profit and such strong cash flow. I think it's enough to support this amount of debt. Also, if you look backward, you can see the company had debt of about 60 billion long-term debt, and that has come down to 51.58 billion. So they've done an excellent job of paying down their debt while they've also done an excellent job of paying a dividend. So they've done both simultaneously over the last several years. Not only have they serviced the debt, but they've also reduced the debt. So they've proven that they can do this, and this would be a red flag if the earnings per share and dividends per share were a lot closer, or reversed in that earnings per share were below dividends per share, and I saw this in their balance sheet, I would say absolutely the dividend is not safe. But I don't see that. I see an excellent ratio in terms of earnings per share to dividends per share, and so this is just a minor caution here instead of a red flag, right? Especially because they're paying it down so significantly. So to answer the question I posed in the headline, is British American Tobacco's 8% dividend yield safe? I would say yes, it appears to be so. All right, so that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.